Susan, as we were talking about, tech platforms have incredible power in a post-Roe world, and obviously have some decisions to make about how they use that power. What are you most concerned about from the perspective of an investor as we see these issues play out?
That's a really good question. I actually think about it more as opportunities that exist. It's really clear that women are not being served, certainly in the 20 states that have banned abortion. Um, but additionally, I think that there's going to be just a huge impact on business overall, and so that always creates opportunity. There will be founders out there who are looking for solutions that enable companies to really address the retention issues, the recruitment issues, and the challenges in a post-Roe era. I mean, there are 2 million fewer women in the workforce today than there were before COVID. So a lot of women left for multiple reasons: remote learning, daycare centers closing, and just the overall caregiver issues that fall to women. Those women have not come back. This new ruling is going to just exacerbate that. We're going to see fewer women in the workforce. We're going to see fewer women advancing at companies. And we all know that gender diverse teams perform better. So unless companies find a way to begin to mitigate this, I think we're going to have big challenges.
So how is this impacting your own investment thesis?
You know, we back female and diverse founders who bring new thinking to sectors where a lot of change is overdue. So it's healthcare, work, finance, education, climate. Um, and they're all areas where diverse founders have been traditionally overlooked. But one of the things we've learned during the 8 years, 9 years we've been doing this, is that people with lived experience as well as learned experience, people who really understand the end users of a tech platform, the people whose lives are going to be better for it, are generally the people who are going to come up with better solutions. So it's really, for us, it's always looking a little bit ahead of where things are right now, to identify where the opportunities exist. And I think we're seeing them in multiple areas. Certainly telehealth. That's a really interesting arena right now. Look, in 2020, the restrictions on medication abortions, which used to demand that you go to a hospital or a healthcare provider in order to get prescriptions, that was lifted because of COVID, and those restrictions are still gone. So that opens the way for a whole new stream of telehealth solutions, companies that are both serving women in their own states, but also women nationally.
You mentioned the women that we've lost in the workforce post-pandemic, and there's been a big concern about female entrepreneurs also
Yeah.
backsliding in the pandemic. For example, in a tough market conditions, investors might
Yeah.
go back to what they know and, continue to back the sort of stereotypical idea of what a founder should look like, which is not necessarily a woman. Are you seeing evidence that female founders and entrepreneurs are at more of a disadvantage than they were at the start of 2020?
I would say no. We have seen more female founders pitching this year than we did last year, more last year than we did the year before. I think part of the reason is that we invest early. We invest at seed stage, even sometimes pre-seed. Those rounds have been far less impacted by the market changes And that's where you find most women playing too, right? They have not been doing this for long enough to have, seen hundreds and hundreds of IPOs at this point. So I think for the time being, women are slightly advantaged by what's been happening nationally. In fact, the early part of 2022 saw an increase in the percent of rounds that were led by women.
What's your broader thesis about the market environment? Obviously, we know we're seeing lots of volatility in the public markets. We're hearing the potential for the R word over and over again. We know it's impacted the private markets, that valuations are coming down. What are you seeing, and how concerned are you about the macro environment on the funding environment?
Yeah. Look, I think that early on, we told our founders to really think hard about how they were spending capital this year. Not a good time to have to go out and raise. If a company is doing really well and sees a path to really capitalize on this moment in order to grow sufficiently to do a giant round next year, that's great. We're all for that. But there are definitely going to be a number of companies that are good companies that just run out of cash this year because venture capital is investing far more slowly. And we've seen it multiple times now where rounds that ordinarily would have taken a month or 6 weeks are taking 2 months, 3 months, 4 months. And that's rough on founders. That's rough on companies. And there are going to be companies that unfairly go under.